Hi all, this is a video that I created just to kind of guide you through the trading process. It's going to be a real quick video. It's going to teach you the basics of trading, where to get the information, how to look at the information, and how to record your trades. Okay, first thing I need you to do for me, however, is to download the assessment brief for assessment 2 off Wolf, and it'll look a bit like this. Okay, if you were to scroll all the way to the bottom and look at the assessment brief and task, essentially, you have to read this, and I would advise that you read this first before beginning any trading. This gives you the details of what you can trade, when to trade, and it also tells you a bit about how to trade. Okay, so have a look at this first. It does give you a lot of detail. Okay, once you've had a look at this, you can then set up a portfolio. You can then start trading and set up a portfolio in Excel to record all your trades. So if you look at what I've done here, essentially all I've done is that I've set up a very simple table in Excel that will hopefully record all my trades adequately. What I have here is currency pairing, i.e. you can decide on what currency pairing you want to trade from the three. Okay, once you've decided, put it down there so it keeps track of what you're trading. You can look at the initial margin. Once again, once you've decided on your currency pairing, you can then put your initial and your maintenance margin down. Face value will also be determined based upon currency pairing. Max number of contracts, once again, will also be determined based on currency pairing. And finally, number of contracts bought. This just keeps track of how many contracts you've bought for any one particular trade that you've done. Okay, the rest of the columns, date, price, position, whether it's an opening position, whether it's a closing position, direction, whether you've gone long or whether you've gone short, profit and loss, trying to keep track of how much profit or loss you've made every day. The margin account, if you think of the margin account as the floating bank account with the exchange, essentially this is how much money you'll need to keep with the exchange, to ensure that your account's kept open. And finally, commission. Okay? On a second tab, I've also got the bank statement. So it's a really simple bank statement. Date, description, cash in, cash out, and balance. So let's say we start trading today, which is the 26th of November, 2013. Okay? I know that I have capital sum of $250,000, $250,000. So cash in, no cash out because I haven't started trading yet. I'm just going to put the cash in my account first. Okay, so balance equals this minus this. So in essence, that's how much money I have in my account at the moment. Now, say for example, before I start trading, I look at currency. I look at reports. I look at news reports. I look at fundamentals. I look at how the UK is performing, I look at how Japan is performing, I look at how Europe is performing, I look at how America is performing, and I decide that, and all this information will kind of inform the way in which I want to trade. So say for example that I decide, I decide that the dollar pound would be the best currency pairing for me. I'm based in the UK and therefore I know the most about the dollar pound, and I've read reports, I've read news articles saying that the pound and the dollar are the pound's going to do well against the dollar. So I decide that that's my currency pairing that I want to trade, dollar pound. Now if we go back into this assessment one brief, given at the bottom will be basically the maintenance and the initial and maintenance margins for the three currency pairings. In this case, I'm looking at the dollar pound. So it's 1,650 for the pound for the initial, and $1,500 for the maintenance. So let's put this down in our trading portfolio as well. So 1,650 as the initial, and for the maintenance, 1,500. Okay. What about the face value? Essentially, the face value of the dollar pound is 62,500. You also have the face value for the yen given here, and the face value for the euro given here. But because we're trading dollar pound, this is what we're looking at, 62,500. So let's put that down as well, 62,500. Now, what is the max number of contracts I can actually buy? Okay, so the initial margin kind of dictates how much you have to pay to start trading each of these contracts. I have $250,000. Each contract can be bought for $1,650. So max number of contracts will be 250,000 divided by the initial margin. And that indicates that I can buy just about 151 contracts of the dollar pound. Okay? That's how many contracts I can buy. So say for example I've read reports and I decide that a conservative number to go for would be 40. I wouldn't advise that you buy all 150 contracts because you know that the market could move against you and you need some money left in your bank account to essentially pay for any top-ups or any commission or any unforeseen circumstances. So I would recommend that you hold some money back in your bank account. Okay, if you have no money in your bank account to pay for top-up calls, to pay for margin calls, or to pay for commission, technically you've gone bankrupt and technically you've failed the assessment. Okay, if you have gone bankrupt, I'd like you to email me, and we'll have a look at your situation to determine if you can actually begin trading. You can restart the trading process. Okay. So I decided that 40 contracts is a good place to start. Okay, so in essence, what I need to do now is have a look at the pricing for the dollar pound. Okay, so if we go into CME Group, this is the website that you're meant to access all your prices from. Okay, if we go into market data, if we go into delayed quotes, and at the top, click on the FX tab. Okay, within this FX tab, you'll have loads of currency pairings listed here. What you're looking for are those given in your assessment brief. So you've got Euro USD, you've got Yen USD, and you've got Pound USD. Note as well that you'll only be looking at Globex prices. So always look for this Globex symbol right there, because that indicates that you're an international trader, and that's what you're looking for. So we're looking at the dollar pound. Okay, so let's click on that. And that brings up a nice little table detailing the price of the dollar pound futures. Now, you are trading December 2013 contracts, so you're only looking at this top row right here. The last price, this is the moving price, so in essence this is how much someone bought the last contract for. The settlement price, this is how much the contract settled for, so in essence it's a daily settlement price, i.e. the daily closing price, i.e. the market's closed every day, so therefore this is the price at which it will settle. The open, the high, the low, the volume. Okay, the information that's important to you will probably be this price right here, because you're beginning to trade, and this prior settle price right here. Okay, which you're meant to track every day. Now, current price is $1.6184 to the pound, so that's what we're going to buy. It's an opening trade, so let's put that down. So today is the 26th of November. Price is 1.64. Oops, 1.6184. Okay. Position, opening trade. Okay. Direction, we decided that, the market's going to go up, so therefore we're going to go long. Okay. We have no profit and loss yet because it's the first time we're starting to trade, so leave that blank. And the margin account, essentially we've gone 40 contracts. Okay, so number of contracts, in this case 40, multiplied by the initial margin. And that is how much you will have to pay to trade 40 contracts long dollar pound. Okay, don't forget the commission. If we go back into this brief right here, commission on futures position is $25 per contract. Note that it's round turn, so you'll only have to pay it once, and then only have to pay it once. That means you only have to pay it when you're opening the contract, when you're opening your position. Equals 25 multiplied by 40 contracts. Okay, which gives you $1,000. $1,000. Okay. Essentially, once you've done this, you've recorded your trade. Don't forget as well that you need to record this in your bank statement. So on the same day itself, 26th of November, long, 40 contracts, dollar pound. Okay, so no cash in, cash out will be, that's how much you pay for it initially, $66,000. Don't forget the commission, add the commission. So in total, you have $67,000 going out on 26th of November. So it's 67 going out. Therefore, the balance in your bank account will be former balance plus whatever cash in minus whatever cash out. Okay, and that's how much money you have left in your bank account. So real simple. Okay, so therefore you now have an opening trade, and that's the start. Don't forget as well that you'll have to record this trade with myself. Okay, i.e. you'll have to go online. Once again, if we go back into this document right here, and let's click on this. Let's open that. Whoops. Okay, and what you have is this. Okay. essentially, this is the trade, this is the website at which you're meant to record all your trades with me. So, student number, let's say for example my student number is 1112. Type of trade, it's an opening trade. All you're doing is that you're keying in details from here into this document here online. Direction of trade, we've gone long. Currency pairing, we've gone pound dollar. Number of contracts, we've gone 40 contracts, and the current price, if we go back to this, would be 1.6184. That's what you bought at, 1.6184. Submit. Good. And that's all you have to do. So what you've just done there is that you've recorded your trade with myself. I now have a record of what you've done and what you've bought. So once you bought, so that there is really no cheating in this context. Okay. So simple. You've opened your trade. And you can now, you've opened your trade, and now you can let your strategy run out. So say, for example, if my strategy is to hold this position for 2 days, so I'm going to hold it for the 27th and the 28th. And on the 29th, I'm going to sell that post. Okay? So on the 27th, we have a price. But what is that price? Once again, we'll have to go back onto the CME website. Okay. And you'll now be looking at this prior settlement price here. So every day, for as long as you hold the contract, at about 6 p.m. British time, Greenwich Mean Time, go online, go onto the CME website, and record the settlement price down. Okay, so let's say, for example, I've waited a day, and this price here is now settlement price, 1.6146. Okay, so say, for example, we've gone online, we've had a look at the price, it's now 1.6185. Hypothetically speaking, that can move. Position remains the same. We're still open in this post, in this trade. Direction still remains the same. We can now work out our profit and loss. So profit and loss will be worked out using a simple formula: U price minus old price multiplied by face value multiplied by number of contracts, and that gives us a profit and loss of $250. Okay, and this profit and loss will be added to the margin account. Okay, it's like I said, the margin account is like your rolling bank account. So this profit and loss just goes straight back into your margin account. Commission, you don't pay any commission. Okay, it's a one-off payment. Okay, so let's say, okay, so we're pretty happy. The market's going in our direction. We're making a slight profit. Now, let's say it goes to the 28th of November. Okay, and the markets take a turn for the worse. 6134. Okay, essentially we can now work out our profit and loss again. Equals new price minus old price multiplied by number of contracts multiplied by face value multiplied by number of contracts. Okay, ooh, that's a big hit. So let's see how much we've made here. This one plus this, it's a big hit, and that comes out your margin account. Note as well that this margin account, you have to be very careful with your margin account, okay? Because you have a maintenance margin level. That means that because you bought 40 contracts, your margin account can never go below 40 multiplied by the maintenance margin level, the maintenance margin value. Okay, so it's 40 contracts multiplied by the maintenance margin value. So your maintenance margin, your margin account can never go below $60,000. And in which case, it actually has gone below $60,000 in this case. So let's put another little column here, and let's call it top up. Okay, essentially we need to top up the margin account to bring it back up to 60,000. To bring it back up to $60,000. So in which case, how do we find how much we need to top up by? Equals $60,000 minus 5,500. Okay, so we need to top it up by 6,500. And if we go back into this, plus 6,500, there we go. Our margin account is now the same value as our maintenance margin level. Note, however, that this top-up column will be quite important because it does indicate when you have your top-up amounts, and these top-up amounts come out from your bank statement. So you'll have to pay them in cash. So if we go back into your bank statement, it is now the 28th of November. Yep. And let's say we have top-up amount for the dollar pound, for the pound dollar. So once again, no cash in, cash out, 6500. Okay, what we have here is this plus this minus this, and that gives us 176,500. This is a good example of why you shouldn't spend all your cash all at once. Okay, so that's what we have. Finally, on the 29th, let's say that, I've decided that, right, enough is enough. I'm going to sell my position. I'm going to close my position because this is my strategy. I've just lost $12,000. I've just lost $12,000, and therefore I'm going to close this position out. So when you're closing the position out, once again, you'll have to go onto the CME website, and you're now looking once again at this price right here, 1.6182. So what we have here is 1.6182. Okay. Closing. This time, to close, you just go short. Okay. Now, how do we work out profit and loss? Equals. Well, this time we're going short. Equals new price minus old price multiplied by number of face value multiplied by number of contracts bought. Okay, and that's what we have. 12,000. Once again, this will add it back to our margin account. And that's what we have. Closing amount, £72,000. This £72,000, your position is now closed. Note that when you close the position as well, you'll also have to tell me. So you'll have to go back to this website here. Once again, student number, type of trade in this case, it's now closing. Direction, you went long initially, so now you have to go short to close out the position. Pound dollar, number of contracts, you have to close it out entirely. And the price is 1.6182. Okay, submit. Done. Okay, you will only have to submit those prices, or you only have to submit prices to me when you're opening and when you're closing. Okay, these prices in between, I do not need to know, but you will have to track them down yourself every day. Okay, so you've closed your account, you now have $72,000. This $72,000 will go back into your bank statement. So 29th of November. Okay, close. Position. Dollar pound. Pound dollar. Whoops. Pound dollar. Cash in will be 72,000. There's no cash out because you have no expenses for this day. And your bank statement now goes up to $248,500. Okay, so that is essentially how you trade. These are essentially the basics at trading, and I hope the videos kind of helped you out slightly with regards to how to trade. I'll also encourage you to go online and have a look at lecture 4. There is an example portfolio in there, and play around with that portfolio slightly. I also encourage you to start trading as soon as possible, preferably by the end of this week. Okay? Thank you. Bye-bye.